Welcome back to Xiaomi Insider. The tech world never sleeps, and neither do we. Get ready for a rapid-fire update on the most talked-about developments. From automotive innovations shaking up the industry, we have a major story to kick things off. Next, we're diving into the financial performance of a tech giant, exploring their recent earnings report and what it means for investors. Plus, we'll look at market underperformance. Then, we're shifting gears back to the automotive world with a surprising update on a highly anticipated electric vehicle and its CEO's candid advice to customers facing long waits. And finally, we're getting hands-on with a brand new smartphone, breaking down its display, battery, and audio capabilities. Don't miss any of these essential updates. Hit that subscribe button and ring the bell so you never miss a beat. Automotive race heats up as tech giants navigate new terrain. The electric vehicle revolution continues to redefine the automotive landscape, attracting intense competition from both established players and ambitious newcomers. In this dynamic arena, the strategic approaches and market outcomes of major tech companies offer critical insights into the future of mobility. A recent analysis highlights how Xiaomi's burgeoning success in the EV sector starkly contrasts with the challenges and eventual discontinuation of Apple's ambitious Project Titan, providing a compelling case study for the industry. Apple's foray into the automotive world, known as Project Titan, was envisioned as a transformative endeavor aimed at creating a fully autonomous electric vehicle. Under the leadership of CEO Tim Cook, the project sought to integrate cutting-edge AI and luxury features, setting a new benchmark for personal transportation. However, the path to production was fraught with significant obstacles. The project reportedly grappled with internal disagreements over its direction, including whether to pursue a fully autonomous system or a more conventional vehicle. Technological hurdles, such as developing reliable autonomous driving systems and battery technology, also proved to be substantial challenges. Furthermore, the automotive industry's notoriously complex supply chains and stringent safety regulations presented a steep learning curve for a company primarily known for consumer electronics. These persistent difficulties ultimately led Apple to scale back its ambitions, shifting focus from building its own car to providing software for other manufacturers, a significant pivot from its initial grand vision. In sharp contrast, Xiaomi has demonstrated remarkable agility and strategic foresight in its entry into the EV market. The company has effectively leveraged its extensive experience in consumer electronics, smart home devices, and internet services to create an integrated ecosystem that extends seamlessly into the automotive domain. This strategic advantage allowed Xiaomi to pursue a more collaborative approach, forming key partnerships with established automotive manufacturers. Such alliances have been instrumental in navigating the intricate challenges of vehicle production, including supply chain management, manufacturing processes, and adherence to rigorous automotive safety standards. Xiaomi's aggressive investment in research and development has also played a crucial role, enabling it to innovate rapidly and bring competitive EV models to market. This dual strategy of leveraging its tech ecosystem and fostering strategic partnerships has enabled Xiaomi to overcome many of the barriers that proved insurmountable for Apple's Project Titan. The differing outcomes for Xiaomi and Apple in the EV space offer valuable lessons for the broader automotive industry, including companies like Bollinger Innovations, Inc., Nasdaq, BINI. The rapid pace of innovation in the electric vehicle sector demands more than just technological prowess. It requires adaptability to evolving regulatory frameworks, a deep understanding of consumer expectations, and the ability to forge effective collaborations. As the global shift towards electric mobility accelerates, the strategies that have propelled Xiaomi forward are likely to serve as a significant blueprint for other companies aiming to succeed in this highly competitive and rapidly evolving market. The insights gleaned from these contrasting journeys underscore the multifaceted nature of success in the modern automotive industry. But what happens when demand outstrips supply so severely that a CEO advises customers to look elsewhere? We'll explore this surprising situation next. Tech earnings and market signals, Decoding investor sentiment. For investors and followers of the global technology sector, understanding the financial health and market positioning of major companies is paramount. Recent performance indicators and earnings reports often provide critical insights into broader industry trends and individual company strategies. In this context, Xiaomi's 1810HK Q2 earnings report presents a complex picture, marked by discussions of setup features exhibiting low volatility and a period of recent underperformance. This situation prompts a closer examination of the factors influencing its market valuation and future growth prospects. Xiaomi, a powerhouse in consumer electronics and increasingly in smart devices and electric vehicles, operates within a highly competitive global market. Its Q2 earnings report, while not detailed in the provided snippet, is framed by indicators of low volatility in its operational setup and a period of underperformance. Low volatility in setup features could imply a stable, predictable operational framework, which might be seen as a positive for operational efficiency and risk management. However, in the context of a fast-growing and often volatile tech market, it could also suggest a lack of aggressive innovation or a conservative approach to market expansion, potentially leading to slower growth compared to more dynamic competitors. The mention of recent underperformance further suggests that the company may be facing headwinds, whether they stem from increased competition, shifting consumer preferences, macroeconomic factors, or challenges in specific product segments. The broader implications of these financial signals extend to investor confidence and market perception. When a company like Xiaomi experiences underperformance, it often raises questions about its competitive edge, product pipeline, and strategic direction. Analysts and investors will closely scrutinize the earnings call for explanations and future outlooks. Factors such as supply chain disruptions, global economic slowdowns, or intense price competition in key markets like smartphones and smart home devices could all contribute to such performance. Furthermore, the company's significant investments in new areas, such as electric vehicles, while promising for long-term growth, can also strain resources and impact short-term profitability. Balancing investment in future growth with current performance is a delicate act for any tech giant. The context provided by the call to join over 55,000 investors, including top global asset managers overseeing substantial assets, indicates that Xiaomi remains a significant entity in the investment landscape. These sophisticated investors are likely analyzing the company's fundamentals, including its market share, innovation capabilities, and management strategy, to make informed decisions. Their continued interest, even amidst discussions of underperformance, suggests a belief in Xiaomi's underlying value and long-term potential. The interplay between operational stability, market performance, and investor sentiment will be crucial in shaping Xiaomi's trajectory in the coming quarters. Understanding these dynamics is key for anyone seeking to comprehend the nuances of the current technology market. Demand for Xiaomi's latest electric vehicle is so high, it's causing a massive backlog. And the CEO's reaction might surprise you. EV demand surge creates unprecedented backlogs, prompts CEOs' unconventional advice. The electric vehicle market continues its explosive growth, with new models generating unprecedented levels of consumer interest. However, this surge in demand is creating significant challenges for automakers, particularly in managing production and customer expectations. Xiaomi's highly anticipated YU7 SUV has become a prime example, experiencing such overwhelming demand that it has resulted in a backlog stretching nearly a year, prompting CEO Lei Jun to offer candid advice that includes considering rival vehicles like Tesla's Model Y. Unveiled as a direct competitor to the popular Tesla Model Y, the Xiaomi YU7 SUV captured the market's imagination immediately upon its release in late June. Within a mere 3 minutes of going on sale, the YU7 garnered approximately 200,000 orders. This rapid uptake has translated into extensive wait times for new customers, with delivery estimates now extending to 56-59 weeks. For many, this means not receiving their vehicle until well into 2026, a considerable delay that highlights the challenges of scaling production to meet sudden, massive demand. While high demand is generally a positive indicator for automakers, it can also lead to customer frustration when wait times become excessive. Data from China's 12,365 Autocom platform revealed that the YU7 was among the top 20 most complained about vehicles in July, with the lengthy waiting period cited as the primary grievance. In response to these customer concerns, CEO Lei Jun addressed the situation in a lengthy social media post. He acknowledged the production delays and, in a move that underscores the intensity of the backlog, advised those who require a vehicle sooner to explore alternative options. His recommendations included other Chinese EV manufacturers such as XPeng with its G7 model and Li Auto with its i8 model, as well as the highly successful Tesla Model Y. Lei Jun's specific mention of the Tesla Model Y is particularly noteworthy. He stated, "The Model Y is a good car, and Tesla announced many preferential policies yesterday, so you may want to consider it as well." This endorsement echoes his earlier subtle acknowledgement of Tesla's refreshed Model Y, where he responded to its launch with a simple, "okay," on Weibo, suggesting confidence in the YU7's ability to compete directly. The YU7's appeal is rooted in its competitive pricing and impressive specifications. The base standard model starts at 253,500 yuan, approximately $35,300, featuring an 800-volt architecture that allows for rapid charging from 0–80% in just 13 minutes. It boasts a CLTC range of up to 835 km, 519 miles, and is powered by a 315 HP motor. Higher trims, like the Pro and Max models, offer dual motors and even more powerful performance, with prices reaching up to 329,900 yuan, approximately $46,000, for the top-tier Max variant. Xiaomi is currently ramping up production at its Beijing facility, which is tasked with manufacturing both the YU7 SUV and the earlier SU7 sedan. In July, the company achieved a record delivery of 30,000 vehicles across all models. However, meeting the demand for the YU7 will require significant scaling. Lei Jun has set an ambitious target of delivering 300,000 vehicles in 2025, a figure that encompasses all models in their lineup. The current situation with the YU7 backlog highlights the immense potential and the operational challenges that Xiaomi faces as it establishes itself as a major player in the global EV market. From electric SUVs with year-long waits to the latest in smartphone technology, we're covering it all. Up next, we dive into the details of a new smartphone's impressive display and battery. Poco M7 Pro 5G, a deep dive into display, battery, and audio performance. As the smartphone market continues to evolve, brands are constantly pushing the boundaries of technology to offer compelling user experiences. The Poco M7 Pro 5G emerges as a noteworthy contender, featuring specifications that place it competitively within its segment. A closer examination of its display, battery life, and audio capabilities reveals a device designed to deliver on key user priorities, offering a blend of performance and value. The Poco M7 Pro 5G shares its display panel with other recent Xiaomi devices, including the Redmi Note 14 5G and Note 13 5G. This 6.67-inch AMOLED screen boasts an extended Full HD Plus resolution, 1080 x 2400 pixels, and a fluid 120 Hz refresh rate, complemented by a 240 Hz touch sampling rate for enhanced responsiveness. The display also supports HDR10+ for vibrant visuals, features 960 Hz PWM dimming to reduce eye strain at lower brightness levels, and covers the DCI P3 color space for accurate color reproduction. Protection is provided by Gorilla Glass 5. Official specifications claim a maximum automatic brightness of 1,200 nits and a peak brightness of 2,100 nits. Practical tests measured manual brightness at 531 nits and automatic brightness peaking at 1,179 nits, closely aligning with Xiaomi's claims. The minimum brightness is a low 2.7 nits, which is excellent for nighttime use. The refresh rate offers flexibility with two modes. Custom, allowing users to choose between a fixed 120 Hz or 60 Hz, and Default, which dynamically adjusts the refresh rate based on content. In the default mode, the screen drops to 60 Hz for static content and is capped at 60 Hz for most streaming applications and certain system apps like the camera and Google Maps. The adaptive refresh rate is also available in the 120 Hz mode, potentially enabling a higher refresh rate in more applications than the default setting. It's important to note that at lower brightness levels, the screen can maintain a 120 Hz refresh rate even when idle. The only instance where a lower 30 Hz mode is observed is for the limited always-on display, which activates for 10-second intervals. The inclusion of HDR10 Plus support means users can enjoy high dynamic range content from platforms like YouTube and Netflix, with the device capable of streaming 1080p HDR10 content. Powering the Poco M7 Pro 5G is a 5110 mAh battery, identical to the one found in the Redmi Note 14 5G in active use tests. The phone achieved an active use score of 11 hours and 21 minutes, considered average. This figure is comparable to the Redmi Note 14 5G, though gaming performance was noted as being slightly lower. For charging, the device supports up to 45W fast wired charging. The review unit included Xiaomi's new 45W power adapter. Tests showed that the adapter could charge the battery from 0% to 32% in 15 minutes, 58% in 30 minutes, and reach a full 100% in approximately 60 minutes. These charging speeds are quite competitive for its price segment. Xiaomi offers two charging modes, fast and standard, along with a nighttime battery protection feature that aims to optimize charging overnight based on the user's schedule. Audio performance is enhanced by stereo speakers, which support Dolby Atmos enhancement, enabled by default. The top speaker doubles as an earpiece. While it's less powerful and lacks deep bass, it contributes to a balanced audio output. The device features volume boost options, allowing users to increase volume beyond the standard 100% mark to 200% and 300%. While these boosted levels can make the sound slightly flatter, they significantly increase loudness. At maximum volume, 300%, the Poco M7 Pro 5G achieved a very good loudness rating. The sound quality is described as adequate, with clear vocals and well-defined high frequencies, though the bass response is minimal. The review notes that the sound quality is similar to the Redmi Note 14 5G, providing a satisfactory audio experience for media consumption and calls. We've covered the highs and lows of the tech world, from electric cars to the latest smartphones. Now, let's quickly recap the biggest stories of the day. That's a wrap on today's essential tech updates. We saw Xiaomi's EV success contrasting with Apple's challenges, explored Xiaomi's Q2 financial signals, learned about massive EV demand leading to year-long waits, and reviewed the Poco M7 Pro 5G's impressive specs. Don't miss out on future updates. Hit that like button, subscribe to Xiaomi Insider, turn on notifications, share your thoughts in the comments, and follow us on all our social channels.